Esteemed members of the profession, good evening. Welcome to today's session. If you can hear me, just type your name on the chat and let us know where you're joining us from. Hello, Dr. Edward, karibu. If you can hear me, kindly type on the chat. Let us know your name and where you're joining us from. All right, thank you, Dr. Nilish from Eldoret, Dr. Pamela from Mombasa, karibuni sana, Dr. Njenga from Kiambu. All right, thank you so much for confirming. I can see the charts are streaming in. Karibuni sana. Dr. Titania from Gong, karibu. So meanwhile, you can remind your colleagues that we've started. We'll be starting shortly. So as we wait for more members to join, for those who've not subscribed on the PPB portal, kindly do so. The title of the event is Financial Acumen for Wealth Creation. You can use the keyword Acumen or wealth to find the event on the PPB portal. Thank you so much for joining. All right, good evening once again, esteemed colleagues. Thank you so much for joining this session. For those who are joining, we're just typing on the chat where you're joining us from, which branch of PSK. All right, thank you so much. Dr. Eunice Karaoke, good evening from Kisumu. Dr. Josephat Nyakundi from Nakuru, karibu. Dr. Donald Rotemo from Kisii. Dr. Boniface from Maidawa, karibu. Dr. Mina from Nairobi, karibuni sana. So I see we are now at 250 members. I think we'll just start. You can remind your colleagues that we've already started. So welcome. Today's webinar is on financial acumen for wealth creation. And we have our two speakers who will be addressing us on this topic. And our first speaker is Lucy Njaramba, who's the Senior Investor Education Officer at Capital Markets Authority. And our second speaker is Grace Mwita, who is a financial advisor at ICA Lion Group. Just before we get started, I'll take you through a few ground rules and announcements. And first, it's to thank you for joining in this session. And to remind you that you'll be muted during the entire course of this session. So if you have any questions, kindly use the Q&A tab. The questions will be addressed by the speakers at the end of the session. For those who have not subscribed on the PPB portal, this is the title of the event, Financial Acumen for Wealth Creation. Use the keyword acumen or wealth so that you can easily find the event on the portal. Also, this session is being recorded and it will be made available on the PSK YouTube page for your reference later. So, welcome. At this point, I'd like to welcome the first speaker, who's Lucy. Lucy, if you can hear me?
Yes, please, Daktari.
All right, karibu.
Asante sana.
You can share your screen.
Okay. Good evening, everyone. I am pleased to be here with you today, and I hope that we will have an interactive session and we'll be able to learn one or two things. Daktari, can you please confirm that my presentation is showing?
Yes, it is.
Okay, fine. So as you've heard, my name is Lucy Jaramba. I work at the Capital Markets Authority, and we will get to hear what is Capital Markets Authority. And I'm in charge of investor education and public awareness on capital markets. And just as a brief, Capital Markets Authority is a government agency that was set up through the Act of Parliament in 1989. So we are, I speak to you, we are neutral, and one of our mandate is investor protection as well as creating public awareness. We have a vision to be the trusted regulator of an inclusive capital market. And that means that anybody should be able to invest in capital markets. It doesn't matter whether you have how much you have, whether you think it's little, there's always an opportunity for everyone. And our vision is to see everyone being a player within the capital markets. Our mission is to regulate and promote the development of an orderly, fair, efficient capital market. And here we ensure that everybody who is licensed to do or to play a part within the capital markets is doing exactly what they are supposed to do. We have our core objectives, which are based under 5 strategic themes, which is inclusivity, sustainability, enhanced operational excellency, agility and leadership, as well as effective governance. And under that, we have derived the strategic objectives, and if basically because the participants here would be our customers, I can just highlight the strategic objectives under customer, which is to grow the base, democratize wealth, and enhance liquidity. And that means we want to include everybody to be able to be a player within the capital markets, be it as a retail investor, be it as an institutional investor, or even an issuer. We are going to learn more about those terms in the following slides. And then we also need to grow the annual market turnover within the industry, be able to optimize customer experience and brand visibility of the authority, as well as enhance strategic alliances. And the strategic alliances are basically like what we are doing with yourselves and your association. And the functions of the authority basically is to ensure market development and investor education. We have a twin mandate to regulate the market as well as foster market development. And under market development, we also do investor education so that at least just don't develop the market and then people don't know what is available for them to take advantage of. And then we normally we have a mandate to approve any primary issues or primary market transactions, and that includes the initial public offerings. For instance, any company that wants to be listed at the Nairobi Securities Exchange, before it's listed, it has to meet a certain criteria, certain requirements, and we have to ensure that before a company is listed, it has passed all the requirements. The authority also does on-site and off-site inspection just to ensure that things are running normally and a normal curve, such that when you see spikes during the trading sessions, then there raises an issue to be investigated so that there's no market manipulation. And market manipulation whereby some people would take advantage and would have undue advantage over the others. We also do a lot of investigations of any market abuse, and the market abuse, we receive them through various methods, which we will see in the following slides, and surveillance of the trading at the NSC. We have staff dedicatedly just surveilling the trading at the Securities Exchange. Within the financial services sector, the capital markets collaborates a lot with the CBK, the Central Bank of Kenya, the Regulatory Benefits Authority, Insurance Regulatory Authority, as well as the SACCO. And all the five are called the financial regulators. Each of them has its own mandate. Of course, the central bank is for the commercial banks, and the deposit taking MFIs, mortgage, retirement deals with the pension, insurance, so regulates the insurance industry, and the SASRA will, of course, deal with the SACCOs. The capital market industry has an ecosystem that comprises various licensees or various market players, and these include, we have what we call investment banks, and these are institutions that are licensed to be able to offer various services within the industry. We have fund managers who are licensed also under the Capital Markets Authority to be able to manage funds that they normally pull from different investors. We have stock brokers that basically deal with the buying and selling of shares. We have the real estate interest trusts managers. Those also are a category of our licensees that deal with the real estate. Of course, the Nairobi Securities Exchange, this is where the actual trading of the securities take place. I would say it is like the a real so-called the market itself. We have authorized the securities dealers, and we have the Central Depository and Settlement Corporation, and this is an equivalent of what a bank is to your money. And now this is the custodian of all your securities that the securities that are traded within the capital market. So once you become an investor, you will be required to have a CDS or a Central Depository account, and you have all your shares kept in the record, kept filed there. We have investment advisors that offer investment advisory services amongst other duties. We have various products within the capital markets. Some may be known, some may be new to different people, depending on the level at which you have interacted within the market. And the most popular, or the vanilla products we call them, is the equity market. And this is where we deal with the ordinary shares, like buying a portion of a company such that you become a shareholder of a company. For instance, majority or most people know about Safaricom. When it came to the market, it issued something that was called initial public offering, and a lot of people bought shares. At that point, the shares were selling at 5 shillings. So there was the IPO, and a lot of people subscribed to that. So they became part owners of the Safaricom and many other companies that have been listed, that is within the Nairobi Securities Exchange. So their shares are usually traded on a daily basis, and the prices keep appreciating and moving up and down. We have the debt market that comprises of the bonds in their various forms, be it treasury bonds, corporate bonds, green bonds. We had Kiba bonds at some point, and those are basically the debt market. That is the debt market. We have the derivatives market, which is under development, still going. A lot of work is going on, and this comprises of futures, the swaps, the swap options, online forex trading, exchange trading. We have a regulatory sandbox whereby if anyone has an innovative idea that can help within the financial services, they are able to come and try their idea. And if it's successful, they can roll it out to the public. We have collective investment schemes, and this comprises of the money market funds or the equity funds. And under that, there are different categories under the various funds. We have the commodities markets, where we are trying to have things like coffee traded at the securities and other products that are in the pipeline. Others include securities lending and borrowing. This is usually for those people who bought, for instance, shares, but they don't actively trade in them. So there's an opportunity for them to lend them to someone else who would be able to trade in the shares. And there's an arrangement to that. So more details we can always share further. So now introducing when one wants to invest, what are the considerations? I know Grace will be covering part of this, so I won't be so detailed. But basically, what we tell people is you need to identify your investment goal. You have to have at least a goal. Why do I want to invest? Maybe I want to invest because I want to accumulate some funds, maybe to buy some land or to build a house or for whatever goal it is, or even for school fees. Then learn the investment basics. And that means, for instance, if you want to invest in capital markets, you need to understand how the capital markets operate, at least have some basic general understanding about the specific product and how they operate. Then out of that, you need to choose an appropriate investment. Then whatever investment you have chosen, for instance, I've mentioned different products. Whatever investment you have chosen, then you need to be able to identify, the various products that are available. You need to choose the most appropriate that will benefit you most. For instance, if you are a retiree, then you need a product to be able to liquidate as soon as possible, or if need be. If you are a young person, then the issues of liquidity may not really matter a lot. But so there are various considerations, so which we will see with along the way. Then you're required to at least manage your portfolio carefully so that you are able to benefit most. So the three main products I want to discuss are the shares, which I mentioned are the part ownership of a company. And shares usually provide a variety provides an investor a variety to choose from. For instance, at the Securities Exchange, we have over 60 companies that are listed. So you'll be having a variety to choose from the over 60 companies. You get some income in form of dividends at the end of the year. If the company makes profits, they are able to declare some dividend, although not guaranteed. Some of the profit may be injected into a company for expansion. But you being a shareholder, you also get to decide what will happen to the profits, whether they'll be shared out as dividends. There's the capital gains that are tax exempt, and then they are affordable. For instance, all you need to know is how much a share that you're interested in buying is costing. Then you multiply that with 100, because the least number of shares, the shares are sold in lots of 100. So for instance, if a share is costing like 5 shillings, then you need 5 shillings times 100, and that is about 500, and you'll be able to buy is the shares. With time, you can be able to increase increase the number of shares so that you can benefit even from a larger dividend or other benefits. You can use your shares as collateral. If you want to take loan and you have some shares, you can use them as collateral to be able to secure your loan. They are affordable, I think that I have mentioned. And then operating convenience, there's liquidity, because the shares trade on a daily basis. So you'd be able to sell if you need to exit. There's ease of exit, and then it hedges it's a hedge against the inflation. When it comes to the bond, basically you are lending your money to, say, a government or a company. When a company floats a bond, they are called corporate bonds. When the government issues a bond, then it is the government bond. So if it's a government bond, you'll be lending money to the government. And the good thing about the bonds, they are secure, because governments rarely default on paying. And once you, for instance, if the bond is, bonds are usually long term, so it's anything more than 1 year. So it could be 10 years, 15 years, 30. We even have infrastructure bonds that take even 35 years. So depending on your investment goal, you'll be able to see what period you are comfortable taking the buying the bond. So once you buy the bond, if the cost of that bond is about 100,000, then you already know the interest that the government will be paying for that bond, and the interest is normally paid every 6 months. So at the end of the tenure of that bond, if the bond was for like 5 years, at the end of the 5 years, you're supposed to get back your principal, and you have been getting the interest every 6 months. So it's also a source of a structured form of, it gives you a structured form of payment. So it's something that you can also benefit from. It provides a high income. Of course, by the time you're investing, you already know the income that you're going to be making out of that through the interest. And then they are also, you can also use them as a collateral if you need to take a loan. Then we have collective investment schemes, and these are usually managed by funds that are managed by fund managers, whereby they pool funds from different investors, be they individual, institutional, or wherever they get the money from. So out of all that pool of funds, they are able to invest in various products, and the profits that they get is prorated to the investors, and then the investors get a return out of that. And this, we say, the investor benefits because there's continuous professional management. And since these fund managers are licensed and usually monitored, because they have to file some reports every other time, then there's continuous professional management. So the investor, you don't have to really hassle and be wondering now which shares should I buy? Should I sell these shares and buy these other shares, or should I invest in a bond? Should I invest overseas? So it relieves you all that hassle, especially for someone who is busy and with other engagements. And then it offers access to a broader array of assets. There's convenient record keeping because the fund manager has to keep proper records. And then there's a scope of good return because the fund manager has a wide range of products that they can invest in. So, and gives diversification, and we will see the importance of diversification in the next few slides. So, as Capital Markets Authority, as I mentioned, we are mandated with creating awareness as well as investor protection. We don't want to have people coming to the market and then they are out of negligence of maybe the market players. We don't want them to lose out their hard-earned money. So what we always tell the potential investors, or even the ones who are already investing, is to ensure that they are investing, that the seller that is selling to them their product is licensed. Whatever product it is, be it capital market product, be it you're buying a plot, be it whatever it is, ensure that at least the seller is someone that you know, you have an idea of if things go wrong, where would I go? And is the investment registered? Within the capital markets, we have some, I would say, some people who purport to be dealing with the, say, like capital markets products, but they are not registered. They just try to hide behind various products that are approved by the authority, or even other players within various industries. So you need to be able to know whether the investment or the product you're buying is registered. How do the risks compare with the potential reward? Sometimes we get people coming with the very good deals, and they are even guaranteeing you that there's no risk and you will get your 100% return, or even these pyramid schemes that start up, and then they are promising a very high rewards. So it's good to always know that there are always risks, and you should be able to evaluate and see the risks, how the risks compare with the potential rewards. Then ensure that you understand the investment, and then again, where can you turn for help? Diversification basically is where we advocate for someone having their investment, say you can invest in some shares, you can have some land somewhere, you can have some business somewhere, so that if one is not doing so well, then you are able to recover from the other one. Even for shares, you can buy from different counters, so that if one counter is not doing very well, at least the others can boost you. So depending on your investment goals again, then you need to be able to diversify and see what other products you can have in your basket. Just to delve deeper into the collective investment scheme, this we had said they are managed by group of professionals, and how they work is that we have the unit trust fund that has a trustee or a manager, and then the investors pool their funds together. So these funds that are pooled together are managed by the fund managers to ensure, and they are invested and managed professionally, so that there is greater return, at least for the investors. And they normally have a wide array of portfolio that they normally invest in. Could be in shares, bonds, money market instruments, or other authorized securities. Of course, if they are licensed by the authority, there are restrictions. There are restrictions as to what they can invest in and what they cannot invest in. So if you want to invest in shares, or if you want to invest in capital markets, where do you get the information? The authority has developed a capital markets app. And in this app, there is a lot of information on how to get started. If you want to start investing, what you need to know, where to get the information. And then the app has linked the licensees that have online platforms, so that through your mobile app, you'll be able to access, for instance, maybe I'll just say, for instance, ICE, or any other licensee that is under capital markets. So you'll be able to access them and transact, or be able to interact with the licensee and get more information, or be taken through how you can be able to open the account or transact in whatever products that you'll be willing to do that. You also have information, pertinent information on and educational materials that would guide you along the way. And the app is downloadable on Google Play and App Store. So I would encourage the participants to also try and download, interact with it, and get to see or learn more about capital markets. Then when you are investing in shares, then how do you invest in shares? We know with technology nowadays, people don't want the hassle of having to go to a broker every other time, having to fill forms, or, we want things that we can do faster. And the shares, as I had said, you're trying to buy a portion of or become a part owner of a certain institution. And then shares, we normally say they're a bit volatile in the short term. So we advocate somebody to at least think long term. For shares, you will find they appreciate within the long term. And for instance, if I may go back to my example of Safaricom, when the IPO was issued several years back, it was costing 5 shillings. And I think last year it had reached about 45 shillings. So you see, a span of like 10, 15 years, that's when you really realize a good return. But those people who immediately after the IPO, the price went down, and because they didn't have the basic understanding of how the market operates, they panicked and started selling the shares at a loss. And majority of them perhaps had even taken loans to be able to buy the shares. So you find a lot of them made losses, a lot of them lost confidence within the market. But those who are patient and those who had some basic understanding they persevered and they were patient, and in the long term they have been enjoying their dividends, and they have been the capital gain. The share price has been appreciating. So if you want to buy the shares through there's an app that we call Dosika app that was recently launched by the industry, and the app facilitates you to trade in the equities. And once you download the app, you will be able to track your investment portfolio, be able to enhance your to monitor even the prices of the portfolio that you're holding. And once you are able to keep seeing the trends, you can be able to make some informed decisions on whether you want to buy, whether you want to sell, or whether you want to add other products within your to your portfolio. The app has enhance financial inclusion and empowerment. And because at least everybody nowadays has a mobile phone, they're able to access the market and get information, the information that they require, and not just the information, but also be able to transact. So investing in bonds, again, technology has also made it easy. A while ago, people had to go through to the central bank, fill forms, then wait a few days, then their accounts are opened. But nowadays, there is the central bank has come up with some technology. There's the CBK Mobile Direct, and that this uses a USSD code. And how to register, all the details are available on the central bank's website. And besides this CBK mobile Treasury Mobile Direct, they recently opened a DAO CSD. And this is a web platform and a mobile app that allows retail investors, whether you're in Kenya or abroad, to invest in government securities. And then the platform allows the investors um, to view even the auction results. If you participated in the auction, you're able to make your payment, so you don't need to physically present yourself to the central bank. And then all the information that is needed is also available on the website of the Central Bank of Kenya. So how do you, what are some of the precautions that you need to take before you can invest? What you need to know the products that are available in the market so that you're able to choose your portfolio wisely. And then you also need to evaluate yourself and know what type of an investor you are. Are you someone who is a risk taker, or are you risk averse? If you are a risk taker, then you'd be able to see the products that would suit you best. For instance, I would say the stocks, the shares normally have a higher risk compared to the bonds, which we said they are secure. So if you're a risk taker, then you don't mind, you can buy the stocks. But a risk-averse person will definitely go for what they feel will be secure. Of course, whatever is more secure, then the return may be slightly less than, and the higher the risk, the higher the return. So there's also that element of trying to balance both the risk and the return. And then choose the right investment product based on the goals that you have. We are saying that the debts are, or the bonds are debt instruments that tend to attract institutional investors, and they trade in large blocks. However, you can still get the bonds that that do not require large blocks, and you don't really need to be so much hands-on. And given that now we have the apps that can even enable you to do that directly, then this would still be a good investment. Over time, the bonds, we have seen now a lot of retail investors also investing in bonds, not just the institutional investors. And then I had said that you don't need, you need to do your homework well so that you're able to understand, or just have a general, a good understanding of the investment that you are intending to invest in. And then you also need to build your buffer. Just ensure that you have enough funds that you can invest, just some fund besides what you would say is for your emergency, so that you don't get an emergency and then you're running to pick whatever to get the money that you had used for investment, so that you can attend to your emergency. Just ensure you have some cash buffer, and I think Grace will detail this further. She will be able to address and tell us how we can comfortably do that. Then think long term. The capital market is basically for long term. It's more effective if it's long-term, and then stay on course by monitoring your investment, track your performance, and then evaluate all the options that are available. Try and evaluate to see what are the risks, what are the returns. Then this diversification, we can't re-emphasize enough. Because as I said, if one basket is not doing well, then the other basket will be doing well, then the losses balances out. And then beware of scams. We receive a lot of complaints in our office of people having been conned or having been like swindled, and they thought they were dealing in genuine products. So we are always telling people to beware and to ask questions and to try and counter check whatever information that they have. So to get started, as we said, just do a self-examination, get to know what you need to, why you are investing, and then deal only with licensed entities. And then for the capital markets products, you need to open a CDS account. And this you open free of charge. All you need is just your passport and a copy of your ID. Then take control of your trading by ensuring that whatever instructions you give, at least there's a record of that. Don't just be doing verbal instructions to your transaction, to your fund manager or to your broker. With regard to investor protection, the authority has various measures, and this includes an investor compensation fund. Then we also have capital markets fraud investigations unit that deal with fraud-related cases. And then we have various ways that someone can lodge complaints through our website. We have enforcement and investigations unit. There's a surveillance system that monitors the trend. You can report any complaint or any malpractice through our website through our whistleblower. And then you can enroll for the CDSC alert services, such that if any transactions take place within your account, then you're notified throughout. Then the sources of funds, this I will note, there are various sources. Grace, I'm sure, will detail this further. And so I don't want to preempt her presentation. Sources of information, with the technology age now, we have all the information is available. It's just a click away. So you can get it from our website, from MSC, Business Daily, the news, and also try and monitor the breaking news, so that if there's any company that you're interested in investing in, any breaking news or any news, whether good or bad, you'd be able to get such information readily available. And we have our contacts there in case of any further details. I'll also drop in my email address in case anyone would like to take this further and to have a greater discussion. And that is the end of my presentation. Thank you. Back to you, Dr. Ari.
Right. Thank you so much, Lucy, for that insightful presentation on the investment options. So at this point, I'd like to welcome Grace, who is also a financial advisor at ICLM Group. Grace, if you can hear me. I think you need to unmute yourself.
Yes, can you hear me now?
Yes.
All right, and you can see me?
Yes.
All right. Yeah, thank you. Thank you for that opportunity. Let me just share my slides. Just a moment. Perhaps maybe in the chat, please be writing, just write one word that you can describe what you have gotten so far. Is it helpful? Is it something that you're finding value for your time? Just describe by one word in the chat. Yes. Good. Yeah, it's insightful. Yeah, as you continue sharing, let me just start off because of time. We'd want to go a little bit deeper. Thank you, Lucy, for being a very informative presenter. Thank you even for partnering and also doing this together with you. It's a joy and an encouragement. I'm glad that we are giving you value. And as we continue, you learn more. You learn more as we go by. So allow me to start off by introducing myself. My name is Grace Mwita, and I'm a certified financial advisor at IC Lion Group with a wealth of experience in financial education, training, and consultancy. My expertise is in areas of income management and income growth strategy planning, investment, trusts, pensions, planning and advisory, insurance, tax, child education fund, retirement, and estate planning, and also private wealth management. Yeah. So at ICA Lion, we are regulated and licensed by Insurance Regulatory Authority, also by Capital Markets Authority, as my colleague Lucy has mentioned, and also by Retirement Benefits Authority, and also partnered with Absolute Insight Consults. So as we discuss the personal financial journey, we want to examine where we are. I'm sure here we are in different ages. I went through the registrations and I could see there are people below 30, quite a number between 30 to 40, and also a good number between 40 to 50, and also above 50. So as you look in this diagram by Dr. Tolani, it just shows you where do you lie or where are you. And we see that between 0 to 20 years, most of us, we are in school, so we are studying, we are busy, playing and studying at the same time, so meaning that we have no income. So by the time we reach 20 years, we start thinking of, okay, I need to earn some money, I need to have my own space. So you find most people move from home maybe around 20 or around 23 there. So you find that between 20 to 40 years, where majority are, this is the time we are getting our first job, our first car, our first house. Some get married, and most of them get their first child during those years. But again, you'll have asked yourself, by the time you're reaching age 40, if you're not age 40, what have you accumulated or accomplished at this age? So again, you have to now, this is why we say that planning early is always the best. But it doesn't mean that if you're already 40 that you can't plan now, you can. But ideally, one should plan early. As soon as you get your first job, get on board and start planning for your future. Then we see between 40 to 60 is another uphill. So now life starts going upwards, where this is where you hear about midlife crisis. They don't come as midlife crisis just like that. It's because responsibilities are more, demands are more. Sometimes you find most people develop health issues between this time. That time you have aging parents who need also care and protection. Your children, that time they're going into high school or college, you're managing their Some are young adults you have in the house. They're maybe not financially stable. You're supporting them. So there's a lot that happens between age 40 to 60 as you head towards your retirement age, where we assume that most of us retire at around age 60. So the thing is, you have to ask yourself, by the time you're age 60, what is it that you have planned for your retirement? Because now that time you have no work, therefore no income. And this is where we tell even the young people, you won't be young forever. And so this is why you should plan early, so that by the time you're reaching 60 years, you're able to now have cash flow that will help you sustain a good lifestyle at that age. And that's how we define the financial journey of life, because it's a journey that everyone goes through, regardless of your background. You'll have to go through this. So how do you do that? So you have to have a plan, because a plan leads you towards your goals. And as Lucy mentioned, that as you start investing, or as you start thinking about growing your wealth, you have to start from where you are. So we start you on a process, which is determining your current financial situation. And that's why it's very important to have a financial analysis, because that's where you can be able to become candid and open where you are exactly. Then you develop your financial goals, then you then now go through the process. It's a process that will lead you now to determining what are you going to invest in, because that determines, do I want long-term? Do I have my long-term goals in place, my mid-term goals, my short-term goals? Because wealth creation is a very, very intentional. And so you have to have something that is already in place, because money, you have to give money the name. If, for example, I'm saving for my retirement, I have to call that money retirement. Otherwise, anything else will come along the way and I'll find myself, divulging into something different. So that is the process. So before even we move further, even when you're doing the planning, I'm going to take you through a process that you'll determine at least your goals, because at the end of this, we want to do something very practical. And what we do is we mentor and we are able to coach, financial coaching, whereby you can be able to go through this process while you develop your goals. How do you identify different courses of action to take? How do you evaluate alternatives? How do you know your risk appetite? Are you somebody who is a risk taker or not? What's your life situation? Because you may be the same age with someone, but your life situation is very different. Maybe you are taking care of siblings, and maybe they're not taking care of their siblings. There's a lot. So then how do you create and implement your financial action plan? And this you need also to sit down with a financial advisor so that you can be able to plan well and be able to now have a clear path of what you're doing and where you are heading to. Then every year, you then review and revise the financial plan. And this is what we do either as one-on-one or as group coaching. And that's what, as ICA, as a fund manager licensed by CMA, we show you how to invest, but then you have to have known what do you want to achieve, because investment options are so many. I was looking at the areas of interest that you were mentioning as you registered. Most of them were talking about, I want to know about investing, but then where do you invest? And what determines what you will invest in, and how much are you going to invest there? And so it determines, investment is also determined by your age. Your age is very important, and your health status. As you know, our health is our wealth. So in terms of financial planning, we consider this pyramid, so that you can be able to know what am I doing, or where am I heading to. So we are all assuming that we are all earning, or we are intending to earn soon. But then you'll have to ask yourself, how do I protect my income? if anything would happen to me, would it take me to zero? Would it take me to death? And that's why now we talk about wealth protection. Before you create, you must protect. Protect that which you have right now, which is your income. How would your income be replaced? If, for example, you get sick, do you have a health insurance that would cover for your medical bills? Or is it that you'll go to the hospital and foot a bill of maybe like 200,000 or 300,000 shillings? So therefore that disorganizes your financial plan. Then have you taken keen on debt management? Because that's another key area, because if you are not managing your debt, then you'll be moving 2 steps forward and 3 steps backwards. Sometimes you find people are paying so much interest on loans that maybe are not advancing them. Then also there's disability insurance, where now in case of disability, do I have something that has covered me for that? Or critical illness? And also life insurance. Do I have a life cover that in case of death, what would my dependents do? Or would they still remain in the same financial situation they're in right now? So that in case of my demise, then they still continue with the life that they were living. And we've seen a lot of people where you find, especially breadwinners, they have given their families very good lifestyles, children going to very good schools, living in very good, lives and, very good houses. But then the minute this person dies, maybe through accident or an illness, what happens is that there's no income replacement. So that lifestyle, they cannot maintain it. So what happens is that they have to go back. So you find children who are maybe going to international schools or to private schools, going to very cheap schools just because they could not maintain that kind of lifestyle. And suppose if this person had already taken a life insurance cover, would have mitigated that risk. So that is why now you have to say, how are you protecting first your wealth before you start accumulating it? Then Lucy mentioned about emergency fund. So that's why you don't invest all your money and you have locked your money to something that's an investment, yes, but if something would happen to you right now and you need cash, immediate cash, do you have access to that cash? And then that's how you check that if you are well protected, if your wealth is well protected, then it can multiply because it has, the risk have been cushioned. So then we go into wealth accumulation. This is where now you think about retirement savings. How do I plan for my retirement? How do I know how much is enough for me? Say, for example, people are saying, okay, I have an SSF, but have you ever calculated by the time you're retiring, how much will that be for you? Do I have, and what will be the purpose of this retirement savings? Because you find now with retirees, you find somebody has retired, they're being given their money, but this is the time they're getting into doing projects or businesses. They've never been in those businesses. So they go, they flop, and within 2-3 years, somebody has zero. And we are looking at life, people are living longer nowadays. So you find somebody outliving their retirement to 20 to 25 years or 30 years. So what will this person live on for the rest of their lives? This is how we show you now, how do you establish a plan right now that will give you cash flow, even in your retirement till death. And that is why now we say you don't want to retire and you're depending on your children to support you, because again, they also have responsibilities. So again, we are looking also in terms of wealth accumulation in education savings. Do you have a plan for your children's education, and especially for higher education? Because that's where now you would want to maybe to choose, maybe a child wants to go to a certain university and to do a certain course. And again, also you want to give your children quality education. So sometimes it can be here, it can be overseas, but it's good to check how much is school fees right now to pay for a pharmacy course, maybe in a university, maybe here or abroad. Then you calculate, you see, okay, by the time my child is reaching this age, do I have enough savings that would cater for for that. And in case of my demise, that child catered for that would be their education guaranteed. And that's why now education covers come in handy. So then you also have to have personal savings, because again, your retirement plan is for your use, consumption. Remember, you'll not be, when you're retired, you won't get medical covers so easily. So you have to pay cash when you go to hospital. That's the time you need proper medical care than when you are younger. You also want a good lifestyle. So again, you have to also have personal savings aside so that you can give you to maybe like you'd want to do a vacation, or you'd want to maybe something that you always wished to do. So that's how we go to personal savings. Then now investments is where now you invest in things that are giving you money over a longer period of time consistently. And we look that into details. And then now finally we go to wealth distribution, where it's about estate planning. How do you plan your estate? That once you're gone, how will you distribute your wealth to your children or to your grandchildren? And here we talk about trust funds that ensures that your wealth is well distributed. So I've talked about why we need protection, income protection. So we would want to just mention a bit on the power of compounding effects. As Lucy mentioned, that when we talk about investments, good investments are long-term, because you want cash quickly, then also it's a high risk. So if you want consistent and you want to accumulate wealth, it takes time. It takes time. And therefore, that's why you find, if you read about Warren Buffett, you realize that he talks about a lot on compound interest. And because people assume, let's say, for example, somebody has started a savings plan and they're below 30. When they're below 30, there is assumption of that they are healthy and they have longevity. So, it means that this person is more promising than somebody who is older. So you find somebody who has started savings and investing by the time they are 30, maybe below 30. You find now by the time they are reaching 10 years more, or maybe at 40 or at 50 years, they can be easily financially free, because now the compounding interest, now what happens is that it builds up. It builds up over the year. Every year, it builds up on the previous. So when we talk about investments, we usually say plan early, because the early, the better. They say mapema ndio best. And it's true, because we've seen. In fact, we are working on a program that is called the FIRE program for the young people, especially below 35. These are people who want to be financially independent by the time they are 40. So by the time they are 40, they are already financially free. So what they do, we put them in a group where we give them a challenge to save and to invest so that they can have their goals met by the time they are 40. And that's why you hear people retiring by age 40 or 45 there. And that is a good thing. If you have a chance, please do that. Yeah, and I would like to read a quote from Albert Einstein. It says, compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. And you are definitely better off being on the earns it side of things. Yeah. So can you imagine somebody who is saving today and somebody who is saving today and is earning interest, and somebody who is paying a loan today and it's still costing him on interest? So you find that the minute you have a plan, a clear plan on what you want to achieve, it becomes easy now to commit to your goals and to actually reach, because most people don't reach their long-term goals because they don't have a plan. And there's no system that they are using to help them understand that. And that's why now we have this forum so that we can enlighten you on this. And one of the things that really hinders people is our lifestyle, because we budget like middle class, and yet we are wanting to build wealth. And what do middle class do? 40% goes to the needs, 55% goes to the wants, and 5% goes to investing. As opposed to the millionaires, whereby you find that they're not in competition. They don't have to live, a life of YOLO. You only live once kind of a mentality. So you find 25% goes to the needs, around 10 to the wants, and 65% goes to the investing parts. So you find that it's intentional, and that's what the basic line is on our behavior. Our spending behavior is the only problem we have, because it's not that we don't know. We know, but we don't do it. I don't know how many you can put in the chat who has a spending tracker, who uses a spending tracker. Maybe you could share. If you use a spending tracker, please put in the chat box. It would be very helpful to know whether people are using spending trackers or a budget. Do you follow a budget? It's very important, so that you also limit your expenditures. Because sometimes somebody will say, okay, I know it is in my head. So if it's in your head, then chances of you tracking it, in a proper way becomes very hard. That's why we advocate a spending tracker. A spending tracker is a template we use that you can be able to articulate what you spent that month. Every coin, you know where it went. Because you find that when we are doing financial analysis with most people, we do analyze, and you find that per month there is like 40, 50,000. They can't allocate. Where did it go to? I can't tell. What did I use it for? I don't know what I paid for, but it just disappeared. And this is what we are avoiding, because if you have to go through the wealth creation path, you have to be very intentional. You have to know, how much have I spent last month? Because sometimes when you're so reckless, you find that anything comes, you just buy. So there's no consistency. You can be able to track, anyway, I'm spending, give an example. I was doing a financial analysis on a pilot. And this pilot, by the time he was going to work, every morning he would pass by Java and get coffee. So we calculated per year, he was spending almost 30,000 that was going to just that coffee alone, just passing by Java every morning, going to work. So what would 30,000 do for someone who wants to invest? Or maybe even when you calculate, sometimes it doesn't come to 30, sometimes it can come to more. So you're just trying to look at, what am I spending more on my needs or on my wants? And also, am I investing? So that is also now what we are talking about when you talk about a spending tracker. So I have discussed that before about the pyramid, and this is where we use the other one didn't have the kind of instruments to use for that. So when it comes to protection, we talked about it's an emergency fund. Do you have a money market fund? Do you have an account with a money market? And that's how we're able to help you now determine, life insurance, health insurance, short-term funds. That's in the area of protection. Then you look at, in terms of wealth accumulation, where we're talking about your retirement and all that, and education for your children, then you look at it here. What savings do you have? Have you invested in mutual funds or in stocks or in business, education fund, pension? Because again, it's a journey. And that's why we are saying that as you go up the pyramid, you'll find that it's the only way you can have this to multiply wealth, already what you have. Then wealth preservation, where now you look at long-term care. This is where now we look at, have you mitigated that wealth is preserved for the next generation? So that when you go to wealth distribution, as I mentioned, you know that this is what I would leave for my dependents or my children. And this, I'm sure that they would to be sustainable for them. And that's on that. So you can't also invest what you don't have. So that's why we are saying there's a difference between saving and investing. Saving is not where you just save and keep. Like even you can have a bank account. But are you investing? Is that money growing? That's why we talked about the difference is the compounding effect. Is it growing? So you can't say that I want this kind of returns, and yet you have not made an investment on that. So again, on savings, do not save what is left after spending, but spend what is left after saving. So once you've have a budget and you have a clear plan, you already know. I always save maybe like 20%. That is for saving and investment, or 30% of my income. Then do I only have one income, one source of income? Because again, we advise that have several sources of incomes so that if one fails, another one can cushion you. So there are a few questions that come with investments, like how much do I need to start investing? And is my money safe when I invest? And Lucy talked about that. You don't go investing in places where they are not licensed, they are not regulated, nobody knows what they do. And so that is why now we are advocating that please do your homework. Where you're investing, ensure that it's a company that is licensed and that is regulated. So you don't cooking their own things and then coming and telling you, oh, you'll have this kind of returns, you know? And it's very good to be knowledgeable, know what you're doing. And that's why she talked about have basic knowledge. So to determine how much you invest, now it determines with your age, with your health, with your goals, and other things that you can do, but financial analysis session would help you do that. Then what are the most popular things to invest in? She has mentioned that, and especially in the capital markets, it's very good because having a collective investment scheme is always the best, because I find it because of diversification. Sometimes you're not able to track when are shares being sold, and when has it gone up or down, when should I buy or sell. I don't have to think about, who will buy my shares and which company will I buy from. So I may not have that time, maybe as an investor, to track. But if I've put my money to a fund manager, I leave it to the professionals to manage that. If they find this is not profitable, they can do, like that's what we've seen. There are options. There's offshore markets. Maybe they're doing better that way, or maybe some real estate that is giving more income, or government projects. There are many options for a fund manager. And you can ask also, what are the major costs of investing? Cost is dependent on your goals, basically, because we all have different goals. We all have different purpose in terms of when it comes to money. So that is personal. And that's why now I say in these webinars, you can listen and get the knowledge, but it comes to an individual level where now it's like a doctor. You go to a doctor, you have to sit down and do a whole check, see what is ailing me. But if you don't do that, you'll never know what is ailing you, and so the doctor cannot help you. So again, it starts from individual. And where is the best place to start investing? I would say, again, depending on your goals, depending on where you are. Because again, what I say is that when it comes to collective investment schemes or mutual funds, is that it has invested, this money that has been invested in very different and various options. So chances and also probability of higher returns is high. Again, tax. We are talking about tax, and it is high. You find that with mutual funds, you get 15% tax relief of your investment. And so it gives you tax relief every month or every year. And also at maturity, it's tax-free. So you find there are many other benefits. There are benefits like life covers and all that. So those are things you discuss and you're able to know, and be able to put all this in one basket, or not even in one basket, but it's diversification, that I have this, I have a little of this, and I don't have to have all the knowledge. I may not be able to be very competent to know which markets are doing well, but again, you also have to look at, is it something that, if it's something that I'm looking for in terms of long term, again, you also have to also place in somewhere that you're confident in. And yeah, it's more on a personal level. So again, when you talk about financial goals, we are talking about goals or dreams that you can have that can cost you a lot of money or quite an amount of money. Let's say, for example, home ownership or higher education, dream vacation, just as I mentioned before, investment project or retirement. So again, now this one, now you have to balance between your lifestyle and your savings, so that you're investing money knowing that it is catering for maybe the 5 of these or more. So that's why I said, give your money a name. Give your money a name. Name it. If you want it for a dream vacation, put it, this is money I'm putting aside for my Hawaii holiday that I want to do in the next 5 or 10 years. Or this is an investment project that I want to do. It will cost me 50 million. So meaning I need to put in ABCD, it's how you calculate. So you must have, and that's why goals are very important, to set your financial goals very, very clearly. And we help in that. So as I had mentioned that, just like any other plan, either it's retirement or education for your children, we know why we should do that. For those of us who have children, we know the cost of education is also rising. So again, you also want to invest in your child's education. That one I had mentioned about tax benefits and all that. And also retirement, we had talked about that. I won't repeat again, because retirement is it's part of us. Anyway, it's coming soon than we expect. So again, we have to say that if we have not allocated something for our retirement, even additional, then it can be a challenge. So again, avoid these pitfalls, because most people give reasons that I can't manage somehow, or it's early to plan, I don't have enough money. All these are just excuses. But remember, whether you give excuses or not, it doesn't cease that the retirement will still come. And so sometimes people say, okay, I have too many commitments. Okay, I can't start now, or I will start at the age of 45. You realize even at the age of 45, you'll have wished you started early. So you find that sometimes you don't need even to put in so much. It's just the discipline. The discipline of that discipline is what most people lack. And therefore, that's why we come in and help you with that. So that is the end of my presentation. Please, if you have any questions or you are put in a chat box, we'll be happy to answer you. Yeah. Otherwise, thank you for being so attentive. Over to you, Dr. Hezron. Thank you.
Thank you so much, Grace, for that insightful presentation. I've just been looking at the comments. I think members are very excited about what you're talking about, and it was just a great presentation. So we'll just dive into the questions. So we have a couple of questions that have been asked. So we'll start with the first one, which is from Dr. Jen. And I think this was being addressed to Lucy, who's asking, does Capital Markets Authority have a role in protecting investor? For example, ensure dubious land or housing investments, housing investment vehicles repay deposits when project fails to take off.
Okay, thank you, Jane, for that question. But unfortunately, the authority would only come in if it was a registered, a licensed. Okay, there's something in my presentation. There's something I said, a real estate investment trust, and this is where the licensee, the rate, the licensed. Okay, I don't want to use very technical terms, but this rate manager who has been licensed by the authority, they normally pull funds from investors who want to invest in real estate, and then now they invest that money in real estate. It could be development estate where the REIT trustee is building, so that now once they build, the rental income can benefit the investors. And it could be a rental, an income REIT, where it's already a building that's already constructed. So the income that is being collected is what is shared out amongst the investors. That is the only place where the authority comes in. If such a REIT trustee or REIT manager does not perform, then we would put them to task and be able to ensure that they refund to the investors. Otherwise, if it's not a registered and a REIT and the capital markets, we will not be, it's not within our mandate. And that is why we introduced that product, so that a lot of these people who are being conned by the real estate proprietors, they have an option to go the regulated way or to just deal with individual proprietors out there. So I don't know if I have answered your question, but we can take it up further in case you need more details. Thank you, Daktari.
Okay. Maybe the next question will be to Grace from Dr. Sarah, who's asking which spending tracker is good, and is there one that is available on the Play Store?
All right. Spending tracker is something that you can formulate for yourself, because it's just the same way we have a diary. It's now a diary for your expenditures. Let's say, for example, you have a small notebook, a very small one, that you can just put, like today, you can put fuel, 2,000, or, you know, I've spent money on, maybe I bought some clothes for 3,000. It's just about indicating, just the same way we have a journal that, you know, we write every day, or, you know, it's just helping you per day to analyze how much have I spent, so that even you can see per week how much is it coming to, or even per month, so that even when you're doing your analysis, you can even do online. But I find it easier to have a physical small notebook, because you have it everywhere you are and it's easily to handle. I personally use that, so I find it easy to use, but depending on, you know, your maybe your preference, then you can choose which one to use.
All right, thank you. We have another question from Dr. Paul Ombugu, who asks, what's the best platform for stocks, and are there international stock options in Kenya? Kindly enlighten a bit on that.
There are a few cross-listed stocks at the Nairobi Securities Exchange, but not in Grace. Do we have any international ones? But I know, like, we have Umeme, which is a Ugandan stock. We have a bit of cross-listing within the East Africa, but I'm not sure. I need to find out exactly whether we have the international ones out of East Africa. And then with regard to the
there are those which are actually in other countries, in terms of there are people who also invest or have agents who invest for them in other markets, like the New York stock market, or, you know, UK. So it depends with the person where they want to invest in.
Yes, correct. Actually, it depends on who you're also using to invest for you, because I think a lot of these licensees also have access to those international stocks, so they'll be able to do it for you. But directly at the Securities Exchange, I think there's limited stock of the companies that are not local. The best platform for stocks, you can download the Dosika, because that gives you the leeway to directly just do the trading of shares. Thank you, Daktari. Maybe we can go to the next.
Right. Yeah. Thank you. We have another question here on from Dr. Tracy, who asks, does one need a standalone life insurance if it is also being offered as part of other packages? For example, some education plans have that, and she stands to be corrected. So maybe, Grace, you can advise on that.
Yeah. Let me, where is the question?
Just on the Q&A.
Yeah, I'm
does
trying
one
to
need
locate the
faster?
question.
Okay, okay.
Or you can read it again.
Okay, just pasted it on the chat again. Does one need a standalone life insurance if it is also being offered as part of other packages?
Oh, yeah. Say, for example, it depends with your needs, because a standalone life insurance, there are so many life insurance products. So there's whole life, where it's purely life cover, where it covers you, just you contribute for a for a very long time, but it's a little amount, but then it just covers you just in case of death. So it has it's not an investment arm. And also, when you're talking about if you want investment plus life at the same time, then you have endowment. So it depends. If you want education cover, then again, you can put in and say, I would want to depend. That's what I'm saying. It depends on your goals, that will even determine what kind of insurance plan you'd need for life insurance.
All right, thank you for that. Someone here is asking on, is it completely possible to opt out of MMF? Maybe Lucy, you can address that. Or Grace.
I'm not sure what he meant by MMF.
Money market fund.
Oh, the money market fund. Oh, okay, okay,
Yeah.
sorry. Whether it's possible for one to opt out.
Yes.
Yes, you can. A money market fund, it is your money. So all you need to do is just tell your fund manager that you need to withdraw your money. So you will be able to, I think it's usually within 24 hours or so, Grace, or your end, or you do.
Some companies 24 hours, others 48 hours. You can withdraw,
it depends
everything.
on, yes, you can get all your money back. So you can withdraw anytime. So it's easy exit, easy entry.
All right, thank you. There's a question from Dr. Alex Kingori, who just wants more information about SACCOs. So maybe one of you can tackle that, maybe Grace?
I'll throw it to Lucy.
Okay. SACCOs are basically like, I would say what, like chamas. Okay, SACCOs are basically used as a tool where you can save, and then for the sole purpose of perhaps getting a loan. And you'll find majority of the SACCOs will enroll you as a member, and then you will save you. They have made either a requirement that you save for at least 6 months, and then you can take a loan, maybe ×3 of your savings at the time you're taking a loan. And all you need maybe are guarantors to guarantee you that loan. And SACCOs also, if well managed, at the end of the year, they declare dividends, which are also shared out by the members of that SACCO. And majority of the SACCOs are regulated. Again, what you need to be cautious is know the SACCO you want to join, so that at least you have you're assured that there's some order in it. It's either regulated, it's under SASRA. Those that are not under SASRA, they should be under the ministry because they are smaller. The SASRA ones have a bigger capital layout. So I don't know if that would be a good brief.
Yes, I think it's okay. There's a question from Dr. Bridget who's asking, for the DAO CSD account, does one initiate payment themselves or with an agent from a bank?
for the DAO, your bank will also be, the payment will be through your bank, because I think there's an element of also having the bank linked in, so that the transactions are also approved by the bank, that has a know your client element.
All right, thank you. Then maybe there's a question from Dr. Wanjiku who asks, what's the best way to save up for an emergency fund? Maybe Grace can address that.
The best way for an emergency fund definitely would be through a money market, because again, as Lucy has mentioned, you can easily put in your money, and when need comes, you can easily withdraw.
All right, thank you. I think that was very clear. There's also a question from Dr. Evans, who was asking, how can I invest in owning a house via pay to own a house?
Grace, you want to cover that, or?
Okay.
Yeah, that now is on real estate. For me, I would say that it depends with the company. There are companies that you can do rent to own, which now you agree with them. Some ask you for some documentation, others don't. So I think here now it depends with, do you have maybe down payment that would help with that, because most of them ask, I think, for a percentage.
Actually, maybe just to add to that, I think it also depends on, do you want to go through the hassle of building it yourself, monitoring and getting to see it being built step by step, or you just want to go get into a ready house and just move in? So I think it's a personal decision as well, because one just needs to do to weigh the pros and cons of each option and see what is more advantageous to him or her.
Right. Thank you for that. Maybe we can take 2 more questions here. There's one from Dr. Eli who asks, which is the better option currently between investing on long-term government bonds, especially infrastructure bonds, or real estate?
For bonds, I think, for instance, infrastructure bonds, they are tax exempt. So that would be ideal. And because infrastructure bonds are usually long-term, their interest rate is also fairly quite good. But again, as we keep saying, it also depends on your investment goal. You need to also weigh the pros and cons of each, and what will enable you get to your objective, investment objective, soon enough.
All right, thank you. Finally, we have one that is on cryptocurrency. There's an anonymous attendee who's asking, is cryptocurrency a viable investment? So maybe we can just hear from both of you on that.
From my end, at least so far, I don't think the cryptocurrency are regulated. So, okay, they may be investment opportunities, but I would think they are for the risk takers, for the high risk takers, because these are investments. If anything goes wrong, then where do you start tracking your investment, or who do you contact to for a resolution, and how do you address your issues? People have been investing, but as the authority, I know we have been cautioning the public to just invest at their own risk, and we have clearly said that these are not regulated products. So if someone wants to invest, they can do so, but at their own risk.
Yeah,
right,
and actually, because it's highly volatile, you wouldn't be able to predict. And since they're not regulated, again, it depends now, as Lucy has said, your risk appetite. If you're high risk taker, you can go for it. But if not, then it's just good to be safe with these other products.
All right, thank you so much. I think we've covered most of the questions that had been asked on the Q&A. So,
Dr. I think I had seen something. There's someone who was asking, who was saying they've been getting notifications of some monthly charge from their CDS account. And I just want to let them know that that has since stopped. There was a proposal for the CDSC to charge a monthly fee, but that was not approved by the authority. So I don't know how the last time they received that notification. If they are continuing to receive that, they can always get in touch with us so that we can follow up, because they shouldn't be getting that notification because the charge was not approved. The other question I think I had noted was there was someone who wanted to know how the interest rate compares. I don't know if they meant the bond interest, how it compares with the inflation rate. And I would want to say that basically the bonds give a slightly higher rate. If I say the inflation, say for July 2023 was about 8.68%. And I know there's a bond that was recently issued that was giving a return of a 10-year bond that was giving 16.49%. So the bonds will give a higher rate than the inflation rate. The other one was on there's something else I had. Someone was also asking if we could rate the return on the investment in real estate. And here I would say investing on average, the return on real estate depends on various factors. For instance, the location, type of the property, market trend, the demand, and perhaps on average, I would say it gives a return of interest of say 8 to 30, but there are of course those extraneous factors that would determine the rate of return. So it's also a good investment option. And as we keep saying, you need to diversify. We are not just saying you invest in capital markets or insurance, or you can have a bit of everything. Just weigh your options carefully. I think that's those are the ones I had noted.
Yeah, I've also noted one which is from Jane Wanjiku. Kindly comment on solidity of contractual savings plan by banks or insurance agencies. I'm not sure which one now she's mentioning, because I know there are so many in terms of savings plans. But what I know, if it's long-term, then if it's long-term, it's tied to, some are 5 years, some are 3 years, some are 10 years. Now, depending with the exact product, then it has its own different features. I wish the question was more specific.
And Dr. If you will allow, I've seen another one which always doesn't miss out on our presentation. I've seen Anne Karanja is asking, how does one get anything from foreign companies like Acumen if one owned shares? And sad as it is, unfortunately, I don't think there's much that can be done. Although the authority is trying to review the regulations and try and see how even these investors who have invested in listed companies can get some compensation at the end if a company collapses out of negligence or mismanagement. But that's something that is in the pipeline. We hope that can be actualized soon enough. I know the president was very keen, and that was one of the things he raised and he queried, and he was like, fine, how does Mwananchi get compensated if they invested in Uchumi, in Mumias, and that has thrown some, has prompted some action to be taken, and we hope in future some of these things will not be happening as often that as they have been. So Karanja, pole sana. Sometimes tunasemanga hasara inapelekana na faida. Maybe if you had uchumi and you had something else, that's what we were saying, diversifying. So one can pick up your losses and kind of balances out. I know it's hard to lose. You don't want to lose any investment, even if it's a single shilling, but there are always risks, because we can't guarantee that everything will be a 100% return.
All right, thank you so much. Maybe the last one, I think before we go to the closing remarks, there's a question on, is it better to invest in money market funds with banks or with insurance companies?
I would say it would depend on, it's a personal choice, because I think at the end of the day, they all publish the return they are giving on a daily, I think in the dailies, or the information is available, but at least I see in the Nation, they always list. So I guess it depends on your personal decision and who you think you'll be comfortable with. As long as they are all licensed, it's like, for instance, from my perspective, is like a mother having 5 children, and then you start saying, this is my favorite. I don't think that would be right. They are all your 5 children, they are okay. So out of those 5, you can be able to work with any. But I don't know if Grace has a different perspective.
No, I would say it's the same, because what happens is that, as you said, it's a personal choice, and also depending on what other benefits are you gaining from that. Yeah.
All right, thank you so much for the responses. So I think we are done with the Q&A. And I'd like to maybe welcome our speakers again to just give a parting shot. Meanwhile, we have created a WhatsApp group on financial management, and we'll be having both speakers in that group. In case you have any questions and any clarifications that you need, you can ask in that group. The link, I've just posted it on the chat right now. If you can just check on the chat, you should be able to see the WhatsApp group to join that group on financial management.
Okay.
So maybe I'd start with Lucy. You can just give your parting shot remarks to our members.
Okay, thank you. I think it was an honor to be part of this discussion, very engaging, and a huge turnout. I am grateful, and I am hoping that whatever information we have shared here has, it's just a beginning of a deeper and a greater discussion that we can progress in future. And we look forward to partnering with yourselves more and more. We do this free of charge, and actually, the authority recently has been writing to institutions and just telling them that the authority, we are available to either talk to their staff, talk to their professional associations, and just share out and sensitize the public on creating wealth and investment opportunities within the capital markets. So anytime you'd feel that you'd require such a forum again, we are always available. So thank you very much for the opportunity.
All right, thank you so much, Lucy. Grace?
Yeah, thank you so much, the PSK team. Thank you, Hezron, for being a coordinator. And also for the participants, I'm glad to see that you found it very informative and actually recommending it to be part of the curriculum or something like that. Yes, these are things that we were never taught in school, but we are struggling with them out here. And that's why, as Lucy has mentioned, we do this to organizations, to individuals, to the public, so they can be able to make informed decisions and they can be able to be more enlightened and knowledgeable. So I know we didn't answer all the areas of concern as you had registered, but we're going to reach out. And also, as Dr. Hezron has said, that there's a WhatsApp group we can engage. And also we'll try to segment in terms of ages, in terms of those who are owning pharmacies and would want to have business entrepreneurship support. We also have that. So we are going to work together with the PSK team in order to continue making impact in your community. Thank you for the opportunity. Thank you.
All right. Thank you so much, our speakers. I think our members have been able to learn really a lot today on financial management, and which is a very key thing in life. So just before we complete, I'd like to just take you through something. So members, this is just a reminder. We have 2 ongoing calls, and the deadline is fast approaching. The deadline will be on 31st of August. So we have a call for the conference committee. Next year's conference is going to be in partnership with International Society for Pharmacoepidemiology. So we're looking for a team that will be assisting in organizing for this conference. So I think I've been sharing the communication to all WhatsApp groups. So kindly register so that you can be part of the conference committee. All the benefits and information that you need is on the links that have been shared in the WhatsApp group. And secondly, we had extended the job advertisement for the CEO, and it will be ending on 31st of August. So for those who are still applying, kindly complete your application because the deadline is fast approaching. So I think those are the announcements that we have for now. Thank you so much for joining us today in this webinar. And for our speakers, Lucy and Grace, thank you so much for the insightful advice that you've given us on financial management. And we're really looking forward to working together, educating more, having our members educated more on finance. Thank you so much, and have a blessed night.
Thank you. Good night, everyone.
Thank you. Good night.